The calm before the storm continues. We'll look at this week's IPO and SPAC activity, including news on who starts trading this week, what big merger was announced, and upcoming lockup and quiet period expiration dates. And since that activity is limited during this shortened holiday week, we'll take a peek into some of the most highly anticipated IPOs coming this fall. Welcome to IPO This Week for the week of September 7th, 2020. Welcome to IPO This Week, where each and every week we talk about all the companies going public, the latest SPACs hitting the market, and all of the lockup and notable quiet period expirations. My name is Kevin, and I want to thank you for checking in again for this week's episode. For those of you in the US, I hope you all had a great Labor Day weekend and enjoyed a little break from the markets after some craziness at the end of last week. As we are rolling into a busy IPO season, besides for our normal coverage, I thought today we could talk a little bit about three of the most intriguing companies out there in the pipeline and let you know where things stand as of this recording. Oh, and you know the names: Airbnb, Snowflake, and Palantir. Let me know in the comments which of these three companies you're most interested in. You never know, you might get an extra video on the one that has the most votes. Up front, just a quick reminder that I'm not a financial advisor, and while this video is meant to be informative, it should not be seen as a recommendation for you to take any action on the companies covered. You should always do your own research or consult with your own financial advisor when making any investment decision. And with that out of the way, let's get to our normal business first and talk about the new IPOs and SPACs coming out this week. Like last week, we're limited as of right now. We only have one confirmed SPAC coming to market this week, and that is Industrial Tech Acquisitions, ticker ITACU, a blank check company out of Houston, Texas, who plans to raise $75 million to acquire an industrial or energy-focused technology business with an enterprise value in the range of $250 to $500 million, with pricing set at the standard $10. According to information posted on NASDAQ.com, the company increased its deal size by 25% last month. The SPAC's management team is led by venture capitalist Scott Christ, who serves as CEO of intelligent video monitoring firm Osperity and is also a partner at Texas Ventures. We'll keep an eye on this one, and we'll see who they eventually announce as their target when that time comes. If any other companies are added to this week's calendar, I'll definitely post an update for you. As many of you know, much of the information with IPOs is fluid, so I try to post any updates from the video in the comments as I have them. We do have a significant merger to talk about. Near the end of last week, Kensington Capital Acquisition, ticker KCAC, announced an agreement with next-generation battery developer QuantumScape for a merger which will result in QuantumScape raising $700 million and becoming a publicly listed company. QuantumScape has been exclusively focused on developing solid-state batteries and designing a scalable manufacturing process to commercialize its battery technology for the automotive industry. QuantumScape believes that the proceeds from the transaction will fully fund the company through the start of production of its joint venture with Volkswagen. Current QuantumScape board member J.P. Straubel, who was a former Tesla chief technology officer, stated that QuantumScape's solid-state anode-less design represents the most elegant architecture I've seen for a lithium-based battery system, and the company has an opportunity to redefine the battery landscape. Wall Street reacted positively to the announcement, with the SPAC stock jumping from $10 to $22.50 at the end of last week. As far as upcoming lockup expirations, we only have Biotech Amara, symbol IMRA, a biopharmaceutical company that develops and commercializes therapeutics for patients with rare genetic disorders of hemoglobin, such as sickle cell diseases. Their lockup ends on Tuesday, September 8th. And then we also have a few notable quiet periods ending on Tuesday as well, and those include KE Holdings, NetStreet, Duck Creek Technologies, and CureVac, all companies we've discussed here in the past. If you're interested, you can catch up with each one of them in the playlist I'll link for you. So let's now start looking forward to what we know and what we're expecting in the near future for some of the biggest names in the IPO pipeline set to debut before the end of the year. The first one is one that I've covered in two videos last week, and that's Palantir, which will be direct listed under the ticker PLTR. I'm not going to repeat everything from those two videos, but I have created a playlist for Palantir, which I'll link for you if you haven't seen them, plus I'll be making more videos on the company as it readies to go public, and then add them to the playlist as well. One of the things I do want to remind you is that on Wednesday of this week, the big data analytics company will have an Investor Day live stream that potential investors are welcome to attend. The details on how to attend it is in the shorter of the two videos that I made. The other thing that I want to let you know with Palantir today is that they have amended or updated their S1 filing, which of course they did right after my last video. This is becoming a pretty frequent occurrence with them. So I'm pretty sure after I finish this video, they'll put something else out just to drive me crazy. Anyway, within the amended filing, there was clarification on how the company would be governed, which was something we were discussing in the comments over the weekend. So the original filing spoke of a unique three-class voting structure where Palantir founders Alex Karp, Stephen Cohen, and Peter Thiel will be given a special Class F share that will ensure that they hold 49.999% of the ownership of the company in perpetuity, meaning that even if they sell the underlying shares, they will still hold that percentage. Which sounds pretty odd, doesn't it? Well, because of that, the SEC probably pushed back, resulting in the amended filing. There's a couple of good articles out there on this if you're interested. I'm going to reference one from Danny Crichton at TechCrunch, where I'll link in the description. In the amended filing, a new risk factor was added to address this, which states, although we currently are not considered to be a controlled company under New York Stock Exchange corporate governance rules, we may in the future become a controlled company due to the concentration of voting power among our founders and their affiliates. So in case you don't know, a controlled company based on New York Stock Exchange corporate governance rules is a company of which more than 50% of the voting power is held by an individual, group, or another company. Now at first glance, the filing states that the founders will own 49.999%, so technically it seems they are right below the threshold. However, that's only when accounting for those special Class F shares, as they will almost certainly have over 50% when you account for any other classes of shares they will own. In other words, public shareholders in the company will likely legally have zero input into the governance of the company. The key line in the filing is, if we were a controlled company, we would be eligible to and could elect not to comply with certain of the New York Stock Exchange corporate governance standards. Based on this, the author of the article states that, given the diminished voting power of employee and investor shares, it is possible that these voting provisions will negatively impact the final price of those shares. So I wanted you to be aware of the updates with Palantir, and again, the article is a good read if you want to check it out. I'll be monitoring and clarifying information as it comes out, plus I have every intention to put out a thorough video on the company closer, but before it starts trading, and I'll share my personal thoughts on all of the nuances of the company and their direct listing, so stay tuned for that. Next up, let's talk a little bit about Airbnb. If there's one company out there with the name brand that the general public is expecting to go public very soon and would generate a lot of interest from retail investors, that would be Airbnb. Other than mentioning that the company is looking to go public, we have yet to talk about it here. And while there's a lot of videos and articles to check out, the reason I haven't talked about it yet is because, as of right now, and really hoping this doesn't change until the video is released, the company has only filed a confidential draft registration statement on August 19th, so there is no public filing available to review where we can talk about the offering and what financials the company is reporting. So most of what's out there is based on anticipation, not facts or statements from the filing. But there was an interesting interview on Bloomberg TV that I thought was interesting to share, and it was with Pershing Square's Bill Ackman, where he had shared that he had had preliminary discussions to take the company public via the SPAC route. In the interview, he stressed that the talks were very preliminary, where they didn't get to dive into the company financials. According to him, Airbnb hasn't rolled out the SPAC route, but he feels that the company would prefer to go public through the traditional IPO route versus going with a SPAC. So it's interesting because for the viewers that follow SPACs, you know that Pershing Square was the largest SPAC ever, and they have $5 billion to work with. So to me, it's interesting to hear that Airbnb has looked into SPACs and the certainty of the dollars they would bring, as it also looks to go to underwriting banks and see what it could raise there, knowing that their business took a hit during the pandemic and the concerns of more market volatility. So they're definitely doing their due diligence. Personally, I am so looking forward to seeing an S1 filing and being able to really examine the financials and see how well they have actually weathered the pandemic storm. While their business was grounded to a halt earlier in the year, there is growing evidence that people are booking again, albeit more in closer destinations, or ones that are within driving distance, and I would love to see the actual data they have on that. Needless to say, when I have concrete information to share with you on the company, I'll share it with you, so definitely have your notification bell turned on. And the last of the big three upcoming IPOs we'll talk about today is Snowflake, who will trade under the ticker SNOW. I made an introduction video to the cloud data warehousing company a couple of weeks ago when their IPO filing was announced. If you haven't seen it yet, I'll link it in the description for you. If there has been one company more of my viewers have asked about than any others, it's been Snowflake. And there had been a lot of interest for some time as this company has raised a lot of capital, in fact around $1.5 billion in venture financing. And to further add to its appeal, last December the company landed Frank Slootman as CEO. For those of you who may not have heard of him, Slootman was previously chairman of ServiceNow and is well regarded in the industry for making money on taking private companies public. Before ServiceNow, he was successful in taking Data Domain public in 2007 before selling it for big money 2 years later. While Snowflake is not profitable, it is growing fast. For the fiscal years ended January 31st for both 2019 and 2020, the revenue had year-over-year growth of 174%. And for an industry, the data warehouse as a service market is predicted to grow at a 29.2% compounded annual rate through 2030. So there should be a lot more growth to come. In fact, according to Bloomberg's intelligence, that's because only 30% of data analytics is now performed in the cloud, putting Snowflake in a great position to take share from the legacy on-premise vendors. The company has a lot of big-name customers in a variety of industries. Some of them include Capital One, Experian, Bankrate, Sony, Office Depot, DoorDash, Instacart, Adobe, DocuSign, Micron, and Dropbox. Now on the flip side, they do have some big time and equally big name competition with Amazon's AWS, Microsoft's Azure, and Google Cloud. Where Slootman sees those companies as operating the infrastructure cloud, he has been quoted as saying that Snowflake wants to be the leader of what he calls the data cloud, a platform that governs and secures private data and can manage rapidly growing workloads. So think about that for a second, and you start to realize that from the infrastructure point of view, Snowflake actually is a customer to those big name, deep pocket companies. And yet, Snowflake also competes with the cloud data management services offered by those very same companies, including going head to head against their cloud data warehouse services, AWS Redshift, Google BigQuery, and Microsoft Synapse. So it's an interesting dynamic where Snowflake is a customer to its competitors, and because of that, is very dependent on the pricing terms it can get from them. For Snowflake's sake, hopefully Amazon, Microsoft, and Google continue to act more like partners than as competitors. I feel like I could go on and on with Snowflake, but I'm going to stop here and also remind you that I will be putting out a thorough analysis video for this company as well as we get closer to the IPO. This is definitely going to be an interesting time on the channel, and I'm so glad to have you along with me. I've had a lot of good comments, and I'm loving the discussion with you guys. Which reminds me, remember to let me know in the comments which of Palantir, Airbnb, and Snowflake you're most interested in. So with that, please like the video if you enjoyed it, and share with your friends, and also on any of your social media sites and forums you're on. The more exposure we get, the more we can grow the channel together, which will allow me to justify putting more time towards it. And if you're new to the channel or just an occasional visitor, we'd love to have you join the community. It's totally free, you just got to press that red subscribe button. And with that, I wish you a good week of trading. Thank you for watching, and until next time, have a great day.